Welcome. Have you been wanting to learn how to sell options better, but you just don't know where to start? Well, guess what? I just wrapped up a week-long amazing live event, and I'm going to include an excerpt from that event where I walk through using my platform how to sell a put, how to sell a covered call, how to calculate the rate of return. That way you know if it's a good trade or not. I didn't just talk about it. I shared my screen with my live trading platform, and I'm going to show you exactly how you can do the same things that I do step by step in order to make yourself realized income, cash flow every single week like clockwork. Stay tuned. I dropped a link in the comment section below if you want the whole course with a special promo. I hope you enjoy. BMNR, I can trade August 29th. That's this Friday. September 5 next Friday. September 12 the following Friday. Let's say I have a 9-to-5 job and I don't want to really have to pay that much attention to this kind of stuff on a regular basis. I might go out a little bit longer. Maybe I go to September 26th. And let's say if I buy 100 shares now and I bought them for $46.49, and then I sell a $47 call, right? $47 call. So remember, go down the strike and then go off to the left. Now, how much would I make for that contract? 6.8. Okay, let's talk about that for a moment. I'm going to buy 100 shares now at $46.55. As soon as I buy the shares, I'm going to sell a covered call against it. Remember, you can't sell a covered call unless you have the shares. So you have to have the shares first, right? So that's a requirement to be covered. That's what makes it covered. So I buy 100 shares at $46 and change. Right away, I sell a $47 call. I get paid $680, right? 6.8, $680 gets dropped into my account. I can use that if I want. I can spend that. What's the likelihood that the price is going to end up higher than $47 before September 26th? It's about 56%. So it was more likely than not. Now, is that number a black and white thing? No, it's just a rough idea. And so it comes from the brokerage companies. They just, display it to the public, big traders, small traders, all traders, right? And it just gives you kind of like a general sense of, how likely is the price going to go to $47. Now, in my view, this stock is based on Ethereum. So, I mean, you could also look at what does Ethereum do on a week-to-week basis or the day-to-day basis? What does Bitcoin do? What does cryptocurrency in general do? Well, I mean, you don't have to follow crypto to know that over time it goes up. It's like always, like maybe it chops around, and there were periods before where like Bitcoin crashed, right? When something crashes, it gives us an opportunity to buy more if we have money to do so. And that's how we can make a lot of money. But this could be a good trade. Let's calculate to see if this might be a good trade. Okay, let's calculate it on the put side. I know we're talking about calls right now. However, like I said, if you're new and you start putting a trade in, really, I would highly suggest that you start with just selling a put, right? So let's just go through an example. This is such good content. You guys like this content? Man, I think everybody should sell options. It can honestly like create an amazing lifestyle, and it's not that hard. And once you look at all these hearts and thumbs up, I appreciate that. I think the only people that don't trade options are people that they just don't understand and they don't want to understand. But that's why kudos to you guys for being here. You are in the right place at the right time. I promise you. So I get so excited talking about this stuff. All right, so BMNR is at $46 and change, right? Let's sell a put against BMNR. We're looking at September 25. Now I don't usually go out a month, but we're gonna go out a month because lots of people watching this content have 9-to-5 gigs and maybe they don't have a bunch of time or they don't want to pay attention that much. So we're going to use this as an example, a good learning example. So let's start somewhere. Let's say I certainly don't want to buy it at 46 because why? I don't want to pay sticker for anything ever, right? And certainly not for my stock. So let's say I want to buy BMNR if it drops below $40. And by the way, we haven't talked about volatility yet, but I want to talk briefly about volatility. See this row right here, implied volatility? So we talked about delta. It's all the way to the right of the screen, implied volatility. And there's also obviously implied volatility for calls. Whatever there is for puts, you're going to have the same information for calls. We talked a little bit about this yesterday, and it's on our agenda to talk about today as well. And I think somebody also asked in the question today or yesterday, the higher the implied volatility, the more premium you get. So look at the implied volatility for this, 115%. It means it has a lot of swing. So as long as I'm comfortable holding it, and I'm not going to freak out if it goes down, which I'm not, right? Because I took Michelle's course, and I'm not going to freak out and jump off the bridge if my stock is low. So I'm gonna sell a $40 put. Here's what that means. Now pay attention. I'm going to say this a couple of times because I want to really like hit this home. BMNR is 46 bucks a share now. I'm going to sell a $40 put that expires on September 26th. I'm going to get paid $295. You guys see that number, right? $295. What that means is I'm committing to buy 100 shares of BMNR if the price drops below $40 between now and September 26th. Now, it could drop below and then pop back up and drop below and pop back up. It's up to the particular person, the individual, honestly, to exercise that option. But usually, it doesn't matter if it goes up and down, up and down. It has to close, generally speaking, under $40 on September 26th for me to have to buy those shares, right? For this commitment, how much money do I have to have? Anybody know? There's no chat, so how can you answer? I'm going to answer for you. If I'm committing to buy 100 shares at 40 bucks, what do? I do 40 times 100, right? 4,000 bucks is not that much money. Can I use margin on this? Well, you can't with Schwab because they say that BMNR is too aggressive, and you have to put up all the money. So I have to have $4,000 in my account to make this trade, and I'm going to make $295. Now let's see if that's a good deal. Now I have tools that I'm creating to make this easier, but in the meantime, just use a simple calculator, right? $295 is the income that I make, right? $4,000 is the money that I have to have in order to make that trade. What is that? That's 7%, 0.07375. We're just going to round it off to say 7%. What does that mean? That means I'm making 7% on my money. However, I'm only keeping that money wrapped up for a month because I'm looking at a September 26th contract. So I'm not going to get super detailed and calculate the days, but I'm going to say that's about 1 month from now. Is that fair to say? It's about 1 month. So I'm going to take 0.07375, this number, and I'm going to multiply by 12. Why? Because there's 12 months in a year, guys. That's why. This is not rocket science. Anybody can do this. I'm telling you, if it sounds confusing, it's okay. It's new. So if it sounds confusing, like it's not you. It's just that the content is new. Man, when I was living in Bali and I was taking Indonesian, I was like, oh my gosh, everybody says that this language is like the easiest language to learn, but I couldn't remember it. But then I just kept practicing, right? I kept reading my content. I was working with a tutor every like couple days a week, whatever, and I was practicing with some friends. And practice, practice, practice. This is the same thing. If you're confused, don't worry. 7% I'm making my money. I'm making 7% for 1 month. I'm multiplying by 12. And what do I get? 88% per year, guys. So you see how easy it can be to make triple digit returns? It's not that hard. And by the way, let's look at all the numbers, all the relevant numbers actually. What's the delta? What's the statistical likelihood that BMNR is going to go from where it is now, $46 and change, to 40 bucks before the expiration date of September 26th? It's 26%. So it's not that high. So it's more likely that it won't close lower than 40 bucks. What does that mean? That means we make the trade, we get paid the 295 bucks. The contract expires worthless because the price stays higher than 40 bucks. And then there's no more risk on the trade. Then I can do another trade that following Monday,